Good afternoon, everyone, and welcome to the weekly update for March 19th, 2025. I'm Jerry Jones, joined by JJ O'Hare from the O'Hare Wealth Management Team. This is our weekly call. We get together once a week to answer questions from our clients and/or prospects of a financial nature. If you have a question that you would like to submit to us, please do so at service@oharewealth.com, or you can text or call us at 414 644 0060, and we will make sure to try and address it on our next call. We've got a question that we really have to deep dive into this week, and JJ and I are going to spend a little more time than normal on just this singular question. And JJ, I think you know what it is, so why don't we pop that up and dive right into it? I have some new money. What can I buy besides stocks and bonds? This is a question that comes up every now and then, especially when the markets are in what we consider quote unquote turmoil. Take it away from me.
Yeah, this is a question when you know people are nervous. Usually people ask me why we didn't buy more of whatever went up most last year. That's usually the question we get. But when people are nervous, or they're, there's a lot of things going on right now. And obviously we've talked a lot in the past few weeks about tariffs, the economy, manufacturing, government spending. When people are uncertain, right, usually they want to look at something else. And so the number one question we're getting right now is, what can I buy other than stocks and bonds? And traditionally, there wasn't a whole lot else other than cash. Basically, just stay out and time the market, which, if you've been watching our calls at all, timing the market's almost never the answer. But also, the question I think people have this is, we've had a pretty good run in the market as a whole, and I think people are wondering what to do next. So let's actually go to a chart I brought along, actually from our partners at KKR. KKR is I think, a very well-respected private equity, private credit, and private alternative investment space company. And in this case, they actually have this chart here, the last few years versus the next few years. So if we can zoom in on this real quick, what you can see is that the S&P 500, right in the middle there, the last 5 years, and this is through October 15th of last year. So the chart's a little dated, but it's up basically 15% annualized over a 5-year period, which is fantastic. That's difficult to replicate. And even many people will tell you that the market should be up somewhere between 7 to 10. And 10 has been, it's something like 9.5 for the past 30 years. Well, if you're going to revert back to the mean, and you're currently running 15 on a 5-year basis, the only way to go back to closer to 10 is probably have lower than expected returns for the next few years. The Japanese MSCI world has done great, but even their returns are expected to be lower. As a matter of fact, many of the returns on this page are expected to be lower. The only ones that are looking pretty consistent or are expected to grow are things like direct lending, private infrastructure, private real estate, private equity. So when you look back at this chart, this is why people want to buy these things. It's a way to get out of the markets and perhaps look at something else. So what are all of these things? Well, there are a lot of different types of alternative investments. There are structured notes as alternative investments. There are annuities that are technically an alternative investment. But when you look at these different types, there are a lot of changes that have happened in this space in the past 15 years, especially during my career. Many people remember hearing about some Ivy League college that was 90% alternative investments, where they would buy, stock in lumber companies and other private equity companies and all these sort of anecdotal stories. But most of the time, for those companies, they had like $100 million minimums to move into. And for a lot of these large alternative players, they realize there's only so many people with hundreds of millions of dollars to throw their way for these investments. So they've changed their approach and have looked at more retail investors. And so what used to be in investments where you had to have $10 million investable or to invest in order to be a part of it, now we look at evergreen wrappers with $10,000 and $25,000 minimums. So it's become a vastly more important landscape to us. It's something we are evaluating on a regular basis. But, and this is the good news, the bad news, it's a little bit more precarious. So let's go to the very next slide. Let's zoom in on this one. When you talk about performance returns, and this is from our friends at Blackstone, who is another AI manager, if you're a top quartile equity manager, you're outperforming your lowest equity managers by about 2% in the last 5 years. If you're a top fixed income manager, you're outperforming by 0.6% the last 5 years. And if you're managing public real estate or public REITs, you're outperforming by 1.5%. But if you look at the right-hand side of that chart, private equity, private credit, private real estate, if you're a top-tier manager, you're doubling the performance in private equity. If you're a top credit manager, right, you're up almost 60%. If you're a private real estate, you're more than doubling your bottom tier's performance. So it's actually more precarious. And that's why I think when we talk about any alternative investments, the due diligence is a lot harder. It takes a lot more time, and we want to be much, much more steady with it.
Yeah, and I think from clients out there, I'm sure at the base root of it, you're going, hey, why don't I own some of those? There are qualifications that come into play. This is just another one of those tools in our toolbox that we bring to bear for our clients. We talk about the tools that are in there, but we also talk about having the people like John and JJ and myself who know how to use those tools in your portfolio. This isn't for everyone. There's not a one-shot solution for everyone in every case. Annuities may or may not be a solution. Market-linked investments, which we use a lot.
Which we'll link
Right.
to the description, right?
Right,
Yeah,
exactly.
we did a video on that. It'd be
Yeah.
great.
And that may or may not be a solution for everyone. There's not a single bullet for everyone in every situation. This is another tool in the toolbox that we're exploring for a lot of our clients. And as JJ mentioned, the entry points are lower. So we have more people who are eligible to get into this right now.
But it's a constant evaluation, and as I just pointed out, it is different. It is separating from stocks and bonds, and we are looking at groups that are buying PE companies, yes, but direct lending, it's really just stuff that the old investment bankers used to do that is now probably better directed in the hands of alternative platforms. Structured notes are really kind of a disintermediation for a lot of hedge fund type strategies.
Right.
But we looked at one group that was they were buying pre-IPO companies. We looked at another one that was buying sports teams. I mean, the alternative investments really are anything except stocks and bonds.
Exactly.
And so it is something we are regularly evaluating.
And we want folks to know we do all of the due diligence for you, or it's done for us before we pass it on to you. So by the time you hear about this directly from us, it's gone through the ringer quite a few times.
Yeah, I think most clients would say they've used some of these things, but
Correct.
even us, we're probably going to be looking at more of them because of our outlook for the future of public markets might be more muted than the last 5 years.
Correct. Let's move on to our book recommendation for the month. That is Good Energy. I just had a client today actually call me. I have a video out there online talking about the book, and they were asking, hey, have you made any of the recipes? Yes, I have. It is what I consider one of the best books I've read in the last 5 years. I would highly recommend you take a look at the video where I describe it more in depth.
Excellent.
With that, we're going to thank everybody for joining us today. We've got a lot going on this month, but most importantly, we want the clients to know that, yes, we are paying attention. We watch it every day. We're always focused on how to make your portfolio work harder and better for you. So don't worry that, hey, are these guys paying attention? Are they unplugged? No, we are here, and this is our job, and we love to do it.
Yeah, and this is the time when everybody's here when they ask me exactly this question: what can I buy on stocks and bonds?
Right. With that, we're going to say goodbye for this week. We hope you have a great week and a great weekend. Thank you.
Thanks, everybody.